I have traded a lot of under 2.5 goal markets, and it is in fact my favourite Betfair trading strategy for football. In this complete strategy breakdown video, I have broken down everything that I know about this strategy, and I'm confident that you're going to learn many things about implementing the under 2.5 goal strategy on Betfair. As you can see, this is quite a long video, and I do recommend watching the video a couple of times at least to fully digest all of the content. I have structured the video into several sections so you can come back to different sections at any time that you like. Firstly, I will explain the theory and the background of the strategy. I will then explain in great detail the different entry points that you can use for the strategy, which will be subdivided into two sections. Entry points based off odds and entry points based off timing when you should enter the market. The next section will be dedicated to exit points, and once again that will also be subdivided into two sections, one regarding timing and one regarding odds in which you should exit the trade. And then I will go in depth regarding selecting the right matches to implement the under 2.5 goal strategy on to be profitable in the long term. And in that section, I will also explain why I believe this strategy does have an edge in the market. And at the end of the video, there'll be a bonus section all about tracking your results and what you can do to cut out losses and increase your wins. I do have a bit of a disclaimer to make straight from the off here. If you are looking for a step-by-step strategy that you simply can blindly follow to guarantee a profit, you aren't going to find that here. I'm going to save you the time and tell you you're not going to find that anywhere for any trading strategy. All trading strategies carry an element of risk. In this video, you'll learn the pros and cons and breakdowns of every aspect of this strategy, but it is down to you to adapt what I'm saying to your own trading style. Sports trading is not easy, it requires a lot of time and effort. In this video, I'm saving you a lot of that time by putting every piece of research I have about this strategy all into one place. However, you're still going to need to put the effort in to be profitable at Betfair trading. When first starting with this strategy, I initially recommend using minimum stakes and just getting stuck in there, rather than sitting around for hours and hours about pondering strategy and what you should do. It is much more effective to learn by doing rather than learn by sitting around thinking and planning. It's important to start with the background of the strategy. What is it? Why under 2.5 goals, not 1.5 goals or 3.5 goals? And what makes this strategy so popular? The under 2.5 goal strategy isn't an outright bet on the number of goals that will be scored in a football match by the full-time whistle. As traders, we are not motivated by the number of goals by the end of the game. Instead, our aim with this strategy is to back under 2.5 goals at the start of the game and then lay under 2.5 goals or back against it after the odds have shortened due to a slow start. This will ensure a guaranteed profit irrespective of the number of goals by the full-time whistle. This is an important point. This strategy is all about exploiting slow starts in football matches. All of the sections in this video, from entry points to exit points to match selection, will all be viewed through the lens of exploiting slow starts in football matches, so keep that in mind as we progress through the rest of the video. Anyways, let's get back to the background of the strategy. At the start of any game, the chance of there being under 2.5 goals by the end of the game is represented by odds on Betfair. The odds themselves represent a probability in percentage of the game finishing with under 2.5 goals. Take this game for example. The game starts with odds of approximately 2.36, and that is a 42% chance of there being under 2.5 goals by the end of the game. Unlike other popular sports to trade like horse racing, tennis, and some forms of cricket, football matches don't end by reaching a predefined condition of winning. For example, a horse crossing a finishing line, a player reaching a certain number of sets, or a team getting a certain number of wickets. Instead, football is time-based, so after 90 minutes, irrespective of the scoreline, the game will end. So what does this mean? In short, it means that football is responsive to time. With every second that ticks by, the current outcome becomes slightly more likely to occur by the end of the game. For example, if a game is 0-0 on the 10th minute mark, by the time it's the 20th minute, the probability that the game will finish 0-0 has increased compared to what it was 10 minutes ago. This higher probability is represented by a decrease in the odds on Betfair. The concept of the odds shortening due to time is referred to as time decay. Time decay opens up the opportunity for you to simply profit through the passage of time with the under 2.5 goal strategy. To explain this strategy with an example, if you back under 2.5 goals, like I do in this game at odds of 2.28, there is a 44% chance of there being under 2.5 goals by the end of the game, so either 0, 1 or 2 goals. Once the game goes in play, time decay starts to take place and the odds gently start to come in more and more with each minute that passes by. This is because 44% likely at the start of the game gradually tends towards being 100% likely towards the end of the game as long as there are no goals scored in the game. If you lay at any point in the period in which the price has contracted, you will go on to make a profit, which is what I do in this example by laying at 1.74, which translates to a 57% chance. The longer you leave the trade open for, the shorter the odds become. This means that your potential profit is increased, but there is a risk because the price moves out massively in the event that a goal is scored in the period of time that you've got the trade open for, and in this event you unfortunately have to cash out for a loss. The reason that this strategy is so popular is because the average number of goals in football matches tends to be around 2.5. This makes the average odds in the under 2.5 goals market tend to be around 2.0, 50%. This attracts a lot of attention from exchange users, and it typically makes the under 2.5 goals market the most liquid of any of the under or over goals markets on Betfair. This is good for us traders because we want as much money as possible, as much liquidity, and lots of price action instead of illiquid, slow markets where little time decay is taking place. Let's talk about entry points. Entry points are a key thing to consider for any trading strategy. This can be broken down in terms of entry points for both the timing and for the odds that you enter into the market. To begin with, let's look at timing. For the under 2.5 goal strategy, choosing your time for the entry point is relatively simple. However, there is a couple of caveats. As this trade is benefiting from time decay, the odds are getting shorter and shorter when you got the position open. Obviously, the shorter the odds are, the worse value it is to back. So we want to back at the highest possible odds to get the highest possible value. The simple conclusion to make is that we want to back at the start of the time decay, so before the game kicks off, essentially. Just before kickoff is the most logical place to enter into the market because obviously no time decay has taken place, and you're at no risk for a pre-match drift in terms of the odds, so you'd be starting the game in the red. You're in at the start of the game, and then you can benefit from time decay from there. And as such, as a general rule of thumb, this is where I would typically recommend you to enter the market just before kickoff. However, as I said, there are a couple of caveats, and there are two slightly different entry points that you can try. The first one is to assess the odds in the hours leading up to kickoff. If you believe that the odds are too high a couple of hours before kickoff, you could back in early, expecting the price to come in slightly before the kickoff of the game. And by the time the game has gone in play, you will already be in a profitable situation. However, personally, I tend to avoid this type of entry point because I tend to find that yes, it is fantastic when it works when you get in a few hours before kickoff and the price steams in a little bit and you start the game in profit. However, just as many times you get it wrong, you enter into the market and it drifts before kickoff and then you start the game in the red, which is obviously not an ideal situation. So I'd only recommend entering into the market several hours before kickoff if you are very good at pricing football markets on Betfair. If you are highly experienced at pricing football matches and use good models, then yes, you can probably look at the odds a few hours before kickoff when the market isn't as efficient and have a good idea if the odds are too short or too big. For everybody else, generally, entering just before kickoff is the safe play. Another entry point is actually waiting until a few minutes after the game has gone in play. And after the few minutes, you would then back under 2.5 goals and that'll be your entry. The reason that I'm recommending this is that sometimes in the opening 5 or so minutes in games, the time decay tends to not be happening very much, and sometimes not even happening at all, where the market will be static and staying at the starting price. And this is the last thing that you want. You don't want to be sat in the market with the risk of a goal being scored and your potential reward not to be increasing due to the market being stalled. Sometimes time decay isn't occurring for justifiable reasons, such as one or both of the teams creating many chances and looking like a goal is likely to be scored. However, sometimes the price can be stalling for no reason at all. There can be no attack momentum for either team, and this is very annoying. So holding off entering the market for a few minutes and assessing the price when the game goes in play is something that you can attempt to do. It also gives you the advantage to watch the first couple of minutes of the game and to see if the game is actually panning out how your pre-match research anticipated it would do. And we'll come on to pre-game research much later in the video. The only downside of entering into the market a few minutes after the game has gone in play is that sometimes the opposite of stalling can happen. Sometimes the time decay can happen really quickly and the market can steam in straight from the start of the game. This rapid steam in the price will mean that you've missed an opportunity to enter into the market on that game just because you've held off in your entry point, which again is an infuriating situation when it occurs. Quite a lot to digest there, just in terms of entry points. I'd recommend trying a bit of everything that I've recommended and to figure out which is the best thing for your personal trading style. In terms of what I do, personally, I enter into the market always just before kickoff, and then as the game goes in play, I'm intently watching the market and seeing where the money is being matched. I'm seeing if any money is being matched, or if the price is stalling, or if money is coming against my position. And if time decay isn't happening for any of these reasons, I'll tend to pull out of the market for either a small win or a very small loss, but I wouldn't be finished there. I would continue to watch the market intently, because I know that the market will start to come back in at some point as long as no goals are being scored. At a point where I think the price might be about to come back in after it's been stalled for a while, I will then re-enter into the market by backing under 2.5 goals again. And if you get your timing of your entry right, you'll be able to benefit from a massive correction in the price. And if you miss the market correcting itself, that is unfortunate, but it's not the end of the world, because it just simply means that your position won't have been matched and you'll be at no risk. What do I mean when I say the market is correcting itself? Well, depending on the starting odds, the price should gently and steadily come in from the starting price all the way down to 1.01 in a nice uniform pattern. This is a graphical representation of that uniform pattern I was just talking about. The reason the graph isn't just a straight line from the starting odds to 1.01 is because as the odds get lower and lower, the tick values start to represent more and more of the book, and that's why the graph starts to curve like that. If you're interested in the way that the odds change, the lower and lower they go, I've got a video about that on my channel, which feel free to watch to learn more about that concept. This is where having software like BetAngel is really helpful, as you can assess the game before kickoff to see what the price action is likely to be, and you can do that using the Soccer Mystic tool inbuilt inside BetAngel. You can check what the expected odds are likely to be after the first 5 minutes of the game, provided that there's no goal scored during that opening 5 minutes. And then once the game goes in play, you can track what the odds are doing and then map it on to what BetAngel predicted before the start of the kickoff. You can see if the price is reacting in the way that it should do, if it's stalling, or if it's coming in too quickly. In the event that the market is stalling, you'll be backed up by Soccer Mystic data of what the price should be at that particular moment in time, and then you can enter into the market by backing if you think there's a big enough discrepancy between what the odds are currently are compared to what they should be from BetAngel's calculations. Oppositely, if the price has come in too quickly compared to what Soccer Mystic said, you could begin to think about Xing a trade earlier than you anticipated to, as the price decay can start to happen much slower to correct for that initial big steam in price. If you don't have BetAngel software, you obviously won't be able to rely on knowing what the price should be at any particular point in the game, and instead you'll have to use your judgment and experience to assess the market to see if the price is stalling or if you think the price is coming in too quickly. This might sound like a difficult feat, but the more and more experience you get of trading these games, you start to see similar patterns of knowing when the market is stalling or knowing when the price is coming too quickly, and then it's going to begin to slow down. That's enough about talking about entry points in terms of timing. Backing just before kickoff is the simplest and safest approach. However, you can implement the various things that I've talked about to get an optimal entry point and increase your profit, obviously. Okay, let's take a look at the entry point based on the odds now. Finding the right entry price, the value price, is obviously a very important thing to do when you're trading on Betfair. Finding the right odds to enter at is inextricably linked to match selection, which we're going to cover in significant detail later in the video. For now, we're going to talk generally about how the different types of odds, the higher odds or the lower odds, impact the under 2.5 goal strategy. You do see a large range of starting odds in the under 2.5 goals markets, from odds well above odds of 3 to odds around 2.0 and to odds well below 2.0, like 1.6, 1.5 even I've seen, and even lower depending on which league you're trading in. I'm not sure what you think, but when I first started trading this strategy, my intuition was that it was better to back at higher odds rather than lower odds, obviously because there's more value in terms of backing at higher odds, and I used to think that if there was a goal when you backed at lower odds, then your loss would be absolutely enormous, making it not worthwhile to enter in at lower odds. My initial thinking was somewhat true. However, in terms of the size of the loss you would expect to see in the event of a goal, you need to know that all of the goal markets on Betfair are linked together. So that's the 0.5, 1.5, 2.5, 3.5 and so on goals are all linked together. If the price for under 2.5 goals is relatively low for any individual game, then the price of the under 1.5 goals market for that same game is also going to be relatively low. That means if there is an early goal for a game that started with relatively short odds in the under 2.5 goals market, the odds are going to move out relative to the size of the market. And showing you on screen two games, one which started at low odds odds and one which started at higher odds. In the event that there's a goal in either game, the odds move out massively, of course, but they don't fly out to the same odds for both games, obviously. Due to this link between the different goal markets, your potential losses are somewhat similar as a percentage of your overall stake, regardless of what the starting odds for the market were. But yes, my initial assumption is true that the shorter the odds that you back at, the worse value you end up getting, as your potential win decreases compared to the higher odds example, mainly just due to the fact that the odds are so short to begin with that there's that little room for the time decay to take place, compared to high odds where it's got a massive movement to go from whatever it started at all the way down to, 1.01. There's more ticks of the market to move and you get, quicker time decay relatively, so you get a higher potential win. It'll be easy if I just show you these 3 examples of markets that I've traded. One was at odds of 1.7, one at 2.3 and one at 3.0. I've adjusted the stake to £100 for each of these 3 trades, just to make it easier for you to visualise what I'm showing you. On screen you see the potential wins and the potential losses over 5-minute segments all the way through to the 25th minute, both in terms of if there was a goal scored or if there was no goal scored. You see that the potential losses are somewhat similar across the 3 markets, albeit the higher odds example does in fact have slightly larger losses than the shorter odds examples. However, importantly, the potential winning returns in the higher odds examples is significantly higher than the lower odds example, with the returns becoming twice as big in the market that started at 3.0 compared to the game that started at 1.7. Based on that data, it does seem logical to think that it's better to back when the game starts at higher odds. However, this isn't taking into account something very important, and that key fact is what is the actual likelihood of a goal being scored in these games. Yes, the higher the odds, the more potential profit you can make, but there is a reason that these odds are so high to begin with. Obviously, the market thinks that goals are likely to be scored in this type of game, compared to the game that's starting off with odds of like 1.7 or lower. So you will win a larger amount when you trade games that start off at higher odds, but you're probably going to win less frequently just due to the fact that goals are going to be more likely to be scored in these types of games. When it comes down to match selection, later in the video I will go on to suggest that it is still better to back at higher odds, and I'll explain that later in the video. However, you can still get lower odds to work for you with this strategy, which again is why I advise you trying a bunch of different things, both for higher odds and lower odds and average odds, to see what impact it has on your psychology when you're trading. Because at the end of the day, if you're trading something you don't feel comfortable, you're putting yourself at a hindrance to begin with. So the general principle on odds is this: the higher the odds are, the more the odds can shorten during time decay, meaning your potential reward is higher. However, there is more risk involved because the higher the odds are, the more chance there is going to be a goal and the more chance of you making a loss. It is all a risk versus reward strategy. There's no one type of odds, higher or lower, that is the perfect odds to back at. The actual edge in the market isn't coming directly from choosing games with the right odds. It is in fact coming from capitalising on slow starts in games, which again we'll cover in the match selection section of the video. And the last thing I want to discuss before we get onto match selection is all about exit points. Exit strategy is obviously very important, and you need an exit strategy both for winning trades and also a plan for what to do when things go wrong. The pessimist in me wants me to start off with what you do when things go wrong. However, there is a good reason for this, because as a trader, your first point of call is to always minimise your risk. If you focus on fine-tuning a solid exit strategy for what you do when the strategy goes wrong, you will cut out any large, unnecessary losses, you'll feel more in control of your trading, and have a much more robust psychology, and ultimately, a larger P&L. Okay, so how do you lose in the under 2.5 goal strategy? Well, it's obvious, I've discussed it already, and that is if a goal is scored at any point that you got the trade open. If this happens, the odds will fly out from the current position and you'll have to lay for a bigger price than you backed at, which means you'll be in the red and you'll have to cash out for a loss. The first question you need to ask is, what will the price fly out to in the event as a goal? The easiest way to predict this is to have a look at the under 1.5 goals market. The current odds in the under 1.5 goal market will be relatively similar to what the odds will be in the under 2.5 goal market in the event that a goal goes in. So it is always handy to keep your eye on the under 1.5 goals market to calibrate your position in the trade. A goal goes in, the odds fly out to approximately what they were in the under 1.5 goals market just before the goal goes in. What can you do? You can either cash out for a loss right there or then, or you can hold the position anticipating that the price will come back down as time decay will start again, and then you can recoup some of your stake back and even break even or even go back into the green. I strongly advise cashing out in the event that a goal goes in, rather than holding onto your position. The entire under 2.5 goal strategy is predicated on selecting games that have a slow start, which means that you are selecting games which you think have a low chance of there being goals in the opening period of the game. If you have selected a game that meets this criteria and a goal is then in fact scored, your prediction about the game has been incorrect. Clearly. Holding on to the position might feel like the right thing to do because you obviously don't want to take a loss, but this goes against the logic of why you entered into the trade in the first place. You thought there was not going to be goals and you was wrong because there was a goal. You cannot shift the goalposts of what you're thinking about the trade. You thought the game had a low chance of goals being scored in the opening period. Stand by that decision and cash out if you've got it wrong and a goal goes in. Because another thing that happens when a goal goes in, you tend to see that the market begins to stall. And this is obviously not ideal because you want the market to start time decaying again and then it to become closer and closer to breaking even or getting to the profit. But if the market price is stalling, you're just a sitting duck exposed to complete risk of another goal and a massive loss with very little upside because the market isn't even coming back in your favour. That's my personal opinion anyway. However, if you do want to stick in the market after a goal's been scored, here are a couple of tips for you. Firstly, BetAngel is a good tool at simulating how long you'll have to wait after a goal goes in before you'll be able to break even again. And again, you'll still be able to check the under 1.5 goals market, be able to see what your expected loss will be in the event that a second goal is scored in the game. In terms of what your expected losses are likely to be in the event that a goal is scored in a game, it depends when the goal is scored. Worst case scenario, if the goal is scored in the first couple of minutes of the game, you are looking at a loss between about 45% and 55%, maybe slightly higher, of your overall stake. If you decide to not cash out and hold your position, and there are 2 quick goals in the first 10 to 15 minutes, you're looking at a loss of at least 85% on your stake. The good news is that your potential loss decreases the later and later the goal goes in. If the goal comes after 10 minutes, your expected loss drops from 45 to 55% all the way down to 35 to 45%. This value drops again to around 25% if the goal comes in around the 20th minute mark. And typically, just after the 30th minute mark, maybe about the 35th minute mark, you tend to see that if a goal is scored at that point, you'll still be in a profitable situation. So you'll be able to cash out for just a very small loss, but most likely it's a very small profit, even if a goal is scored after 30 minutes. I don't want to gripe on about losing too much, I've already spent enough time about it. At the end of the day, you have to figure out your losing Xing strategy based off what works best for you as a trader. For me, I find it just simple to cash out straight away in the event a goal goes in. It reduces the potential for those massive losses, and it's psychologically reassuring that you don't have to sit and watch games praying for a second goal to not be scored in the match. And on to some positives now, let's talk about winning. What is the optimal way to exit the under 2.5 goal strategy for a profit? You have 2 important decisions to make when exiting the market for a profit. Firstly, in terms of the times of your exit, so like 5 minutes, 10 minutes, 15 minutes and so on. And secondly, whether you want to exit in a single chunk or using multiple stakes to exit out of the trade. And that question is what we're going to address right now. Generally speaking, exiting at a single point, so this is where you back all your stake at the start and then lay that entire same stake when you exit out the strategy. This leads to a higher profit compared to exiting in an incremental manner. An incremental exit strategy would be exiting out of the strategy in 4 equally sized stakes or a quarter the size of your initial back stake. Generally speaking, exiting with a single exit point increases your potential profit from the strategy. However, there's a consequence to that because your risk would also be higher doing this compared to exiting using multiple increments. Exiting with multiple increments, yes, your risk is lower, but your profit will also be lower than the single exit point. So again, there is a balancing act on here. I have an example here between Chelsea and Everton which perfectly demonstrates which of the two are better. You see that I enter a trade with £10 stake at odds of 2.32. For this example, I've decided to arbitrarily exit out of the market at odds of 1.9. You can see that if I was to exit out of this strategy using the single point exit, so that'll be backing at 2.32 and then exiting at 1.9 using the same stake, I'll be able to make a £4.20 free bet profit or a £2.20 fully hedged profit. Here I'd just like to point out quickly that when I cash out of the market, I edge out rather than cashing out for a free bet. This is a personal decision rather than letting the free bet run for more profit, but there's nothing I can explicitly say to say one is better than the other. At the end of the day, you should just plan this out beforehand and stick to that decision. For an incremental exit strategy, what would my profit be if I exit out in 4 £2.50 increments? So from the entry point of 2.32 to the exit point of 1.9, again, there is in fact 26 ticks separating the two. So let's look at what happened when I exited out of this market with 4 £2.50 increments, approximately equally spread across the 26 ticks. My first £2.50 increment gets matched at odds of 2.20. So by checking the under 1.5 goals market again, we can determine what our estimated loss would be if there was a goal that was scored. And we can compare that value to what it would be if we still had 100% of our stake still at risk. At odds of 4.8, we'd be cashing out for a 38% loss if a goal was to be scored. Compare that with a 52% loss if we'd still kept our 100% stake in the market. There is a big difference there, of course. With cashing out 1/4 of our stake, we have decreased our potential loss by 14% in the event that a goal is scored. There is a consequence of doing that, of course, because if we look at our potential winnings from this trade now, by checking the odds at our predefined exit point at odds of 1.9, we see that our potential profit has dropped from 22% with the single point exit down to 18% using the multi-point exit. The second £2.50 increment gets matched at odds of 2.08. If we look what impact this has on our potential winnings from the trade compared to the single point exit, our potential winnings drop to around 16%, and our potential loss, based off odds of 4.4, decreases to 22%. In the single point exit strategy at this stage, our potential loss in the event of a goal will be up at 47%. The third £2.50 increment gets matched at odds of 1.97. The potential loss, if a goal was to be scored, drops down to a mere 6.5% compared to 43% with a single point exit strategy. However, our potential win using the multi-point exit strategy drops down below 15%, and that 15% is what we ended up cashing out of this market for when we exit out of the market with our final £2.50 increment. This data set is pretty conclusive to me. Yes, you lose around 7% of your profit from exiting using a multi-point exit strategy rather than a single point exit strategy, and I don't want to play that down because yes, 7% is a significant difference in terms of your potential profit. It might only be 7% when compared to the stake, but when the two values are compared to each other, a single point exit's profit is actually close to being 50% bigger than the multi-point exit. However, there's one thing that's just unavoidable to notice at this point, and that is the potential loss in the event our goal is scored is significantly worse in a single point exit compared to the multi-point exit. The potential loss was always hovering in and around the 40% mark in the single point exit, but by the time we've got a third of our stake out of the market, our potential loss is down to about 6.5% in the multi-point exit. This is a really significant difference. It is crazy to think that in the event a goal was to be scored after we have got our third £2.50 bet matched, the loss you would get in the single point strategy would be close to 500% bigger than it would be if you was using a multi-point exit strategy. The difference between the two is just light and day. It's impossible to ignore, and that is why I suggest exiting in a multi-point exit strategy compared to a single point exit strategy. How many increments you exit in is entirely up to you. Obviously, the trend continues that the more and more increments that you exit out of, your potential profit decreases, but your potential risk also decreases. So yeah, it's a risk versus reward scenario again. I recommend playing around with a few scenarios to determine what is the best strategy for you in terms of what the sizes of your increments can be. One thing to note here is that Betfair obviously have a minimum stake of £2, which means your minimum increment can also be £2. However, BetAngel has allowed me to place bets that are below £2. So if you're BetAngel, there you go. Given that we've established the superiority of the multi-point exit compared to a single point exit, the next thing to look at in terms of exit points is all about timing. This is something that's heavily linked with match selection and when goals are likely to be scored for that particular game. Anecdotally, it does appear that the time decay gets slower and slower the shorter the odds become, as the tick values represent larger and larger percentages of the overall book. However, the return per 10 minutes is relatively uniform. Look at these two examples which start at vastly different starting prices. We see that the profit increases after each 10-minute increment, and as a percentage of the overall potential return from the trade, the potential returns are quite similar for each 10-minute increment as long as the market is behaving itself and not stalling at any point. Let me explain that more clearly. Look at the difference between the 10th minute and the 20th minute mark in terms of the potential return you can make compared to the 20th minute and the 30th minute. As percentages of the potential return, they are close to being identical. This all suggests that timing isn't crucial beneficial in terms of a lost value perspective. The market is fairly efficient in that respect, but obviously the longer you leave the goal open for, the more you're exposed to the chance of a goal being scored. At the end of the day, goals inevitably get scored in most football matches that take place. So there's a balance to strike in terms of leaving the trade long enough to net a large enough profit, but also short enough where you're not exposing yourself to an enormous risk that a goal is going to be scored during the period of time that you've got the trade open for. That's why personally I aim to exit out of the strategy between the 15th and the 25th minute, but it does depend on the game that I'm trading, both the pre-match research and the in-play statistics to see how the game is panning out live. But I'm never too rigid to say that I need to exit between the 15th and the 25th minute. Sometimes I'll exit after the 25th minute mark if the game is a really dull affair, and sometimes I'll exit very early on, a few minutes into the game, if I see that the game is more lively than I anticipated. This has been quite a hefty section about exit points, so I'm going to give you a little summary now of the important factors that you should take away from this. Number 1. Use the under 1.5 goals market to predict your potential loss in the event a goal is scored. Number 2. It is recommended to cash out immediately in the event that a goal is scored whilst you've got the trade open. Number 3. In the event of a very early goal, your expected loss is going to be in and around the 50% mark. However, the later and later the goal arrives in the game, the lower and lower your potential loss will be if a goal ends up being scored. Number 4. Exiting out of the market with a multi-point exit strategy is far beneficial from exiting using a single stake. And number 5, there is a balance to find in terms of the timing that you exit out of the market. You want to be in the market for long enough to get significant profit, but short enough where you're avoiding the chance of goals as much as it is possible to do so. With all of that theory and execution out of the way, let's look at match selection. This is where your edge from this strategy comes from. So let me explain what the edge is and where your potential profit comes from. People price football markets fairly accurately on Betfair, which means the odds for the under 2.5 goals market at the start of the game are fairly reflective of the true probability that there'll be under 2.5 goals by the time the game concludes. If the odds are 2.0, then 50% of the time the game will actually finish with under 2.5 goals. The edge is actually coming from a slow start. And by slow start, I mean the start of the game where no goals are scored. If in this game, that is priced at odds of 2.0, 75% of the goals that are likely to be scored in the second half, then there is a large opportunity here. I believe that a slow start cannot be factored in to the starting odds in the under 2.5 goal market. The only way that it could be factored into the market would be for the starting odds to be shorter than they actually are, to make up for the fact that goals are very unlikely to be scored in the first period of the game or the first half in general. However, you have to think that if the odds were shorter to reflect the potential slow start, that would mean that the odds would become lay value for people who are accurately pricing markets, because the odds wouldn't be accurately reflecting the true probability of the game finishing with under 2.5 goals after 90 minutes, due to the majority of the goals being scored in the second half of the game. I hope that makes sense. Essentially, the starting odds represent the probability that there'll be under 2.5 goals by the end of the game, but the market cannot take into account the fact that there might be a slow start in the game, because if it did take that into account, it would have to disregard the sections of the game which are more lively and have the higher chances of the goals being scored. It can't factor in both the things. It can't factor in slow periods and quick periods of the game. It has to just factor in the entire probability of the market finishing a certain way. If there were instances where it did factor in the slow start, all that would mean is that the opportunity for the edge in the market would simply be transferred to the section of the game where the goal is likely to be scored, because the odds for a goal to be scored would be higher than they should be, and that would be back value. So the reason we're looking for a slow start rather than a slow period anywhere else in the game is simple because the odds in the under 2.5 goal market are at their highest right at the start of the game, and this is where we're going to be backing because it's the highest back value and gives you the most profit long term. The first thing I look at when I'm selecting a game to trade is the percentage of games that finish with under 2.5 goals for that particular league. There are many ways to find this. Personally, I go onto Soccer Stats website, select the league from the toolbar at the top, and then scroll down to the bottom and you see this little data table here, and as you can see there, you see the number of games in terms of percentages that finish with over 2.5 goals. Obviously that's over 2.5 goals, so to convert that to under 2.5 goals, we simply do 100% minus that value. So 100% minus 53%, so that makes you 47%. You can convert this percentage into decimal odds by doing 1 divided by the percentage, so that'll be 1 divided by 47. After you've done that, you multiply the number by 100, and that gives you decimal odds for what the average price should be for games in that league at the start of games for the under 2.5 goals market. This value calculates to be around odds of 2.12, so that means at the time of recording this game, the average odds for the under 2.5 goals for the Premier League, the starting odds should be about 2.12. This value varies across leagues, and it is a useful reference point to calibrate whereabouts your game fits in to the league statistics. Is the market predicting an average game, or is the market predicting more goals than average or less goals than average? A simple reference point, but it's very helpful. As I discussed earlier in the video, my personal strategy is to back at higher odds. So I'm backing at odds higher than this reference value that I calculate for the league. This doesn't mean that I never trade games below that average value. However, generally I always try to look for games above it first and then look at the lower games after that because they got less value on offer. Just higher reward to back in those games that start at a higher starting price. This is somewhat ironic really, because in a strategy that relies on profiting based off no goals being scored, the way I look for games is by looking for games that have the highest number of goals being scored. I'm looking to target teams where a majority of their games finish with more than 2.5 goals, because I want to find those games that have the highest odds, and the reason I have the highest odds is because they're most likely to have the highest number of goals, obviously. Once I've identified the teams in the league that score the highest number of goals, I then check to see which of these teams have the fewest number of goals scored in the opening period of the game itself. To find this, I break down the goal scoring habits of the team. To do this, I check both soccer stats, goal time statistics, and I also check footy stats. Soccer stats gives you an easy numerical breakdown of the times in which the team scores, where footy stats shows you a graphical representation showing where each of the goals are scored during the games that the team plays. I then break these stats down into home and away, depending on where the team is playing, due to the fact that teams tend to play differently when they perform home and away. What we ideally want to find when we look through these statistics is teams that score very few goals in the first half, or for the first period of the game where you plan to have your trade open for. And on top of that, we want to see lots of goals being scored in the second half. If you just had a low chance of goals throughout the entire game, the odds would tend to be too low in the strategy. But if there's not many goals in that first period of the game, but lots and lots towards the end of the game, this is the ideal game to target for the under 2.5 goal strategy. Everton have been a great team for the under 2.5 goal strategy this season, because if you look at the stats, you see that about 60% of their games finish with over 2.5 goals, compared to the league average of 53%. So you would expect to see the starting price for the under 2.5 goals market in Everton games to be much higher than the average odds of 2.12. But both home and away, Everton score about 75% of their goals in the second half, and also concede a majority of their goals in the second half. At home especially, 62% of Everton's games finish with over 2.5 goals. So if the markets on Betfair are efficient, the average starting price in the under 2.5 goal markets for Everton's home games should be around odds of 2.6. However, staggeringly, only 30% of the total goals for Everton's home games actually occur in that first half, with the home team on average scoring after 60 minutes and the away team on average scoring after 55 minutes. This is why Everton have been an ideal team for this strategy this season. The odds start high because the overall chance of the game finishing under 2.5 goals is relatively low, but the market cannot accurately factor in the low chance of scoring in that opening half, without ultimately disregarding the fact that by the end of the game it is likely that there will be over 2.5 goals in this game. The high starting price offers you a great opportunity in Everton games because of the significant time decay you'll expect to see and the reduced risk due to the low scoring patterns of Everton games. You can't guarantee profits, of course, because goals can be scored at any point in the game, but it's all about risk versus reward, and these types of games are very high rewarding for little risk. And again, if you think that the slow start to these games must be factored into the market, then you've got to explain why people who price the markets don't just lay the price or back overs if the price is too short to account for the high scoring possibility that will be in the second half. Obviously, for this strategy, you can't just look for one team. There's two teams playing. You need to compare the two team stats to see if the opportunity is there. Ideally, both team stats somewhat line up, where lots of goals are in the second half and a few goals are in the first half, and in particular the first 20 minutes. If a team that scores a lot of early goals comes up against Everton, then obviously it makes the trade a little bit more risky because you've got two things that are balancing out there. You've got to think which is more likely, Everton's good defence loss and lack of scoring, or this other team's high scoring capabilities. You also have to consider the fixture on its own as well. Which teams are playing which, and what are the motivations of the two teams. If it's a crucial game at the top of the league or a crucial game at the bottom of the league, the reward of winning might not be as big as the risk of losing that game. Therefore, teams could set up more defensively than they traditionally would. Therefore, the goal scoring patterns of previous games may not map on to the current game that they're about to play. A useful tool to determine what the best time is to exit out of the trade can be found on Footy Stats. If you highlight over this graphical representation, a vertical line will appear, and a stats breakdown will appear in this time analytics box at the top here. So you'll be able to see the average number of goals scored, both in terms of absolute numbers and as a percentage of the total goals in the game, before and after certain points in a match. Again, your time of exit is game dependent, depending on the goal scoring patterns. Your ultimate responsibility as a trader is to find the optimal time to leave the trade open for as long as possible to get the potential highest payout, but also have the lowest amount of risk. Not an easy task, but it is feasible by looking at the data. Something useful to consider here is the average number of goals that are likely to be scored in the period of time that you have the trade open for, in general terms. Breaking down 9,559 games that I have the data for, approximately just over 38% of the games have at least one goal scored in the opening 20 minutes of the match, which is then broken down into approximately 31% of the games containing one goal, and about 6.5% of the games containing two goals, and about half a percentage of games containing three or more goals in that opening 20 minutes. These 9,559 games have been taken from various leagues. As you can see, when comparing across different leagues, there isn't that much difference between this data. The background data is always useful for calibrating your opinion about the game. Ultimately, it's more important to look at the actual stats of the teams that are playing. But having this background information of the general times in which goals are scored in football matches is something that I find very useful when I'm framing the trade. I just showed you an example from the 9,559 matches based off the opening 20 minutes. If you want to know these same data based on the opening 15 minutes or the opening 10 minutes or the opening 5 minutes or even on a minute by minute basis, I've got an in-detail blog post on my Patreon which breaks this data down in detail. So you can check my Patreon out in the link below. Game selection can take a long time. That is why I find it best to sit down at the start of the week just to set aside time to look through matches to find your opportunities. For the next 7 or so days, you can either do this by systematically going through every single game in each of the leagues that you most frequently trade. That way you'll be guaranteed to not miss a single game. Alternatively, I tend to use this Footy Stats filter here to organise the table by teams that have the highest percentage of over 2.5 goals. I will then check out these teams, look at their goal stats, and then also check which teams they're playing to identify if there is an opportunity for a slow start there. In this section, I have focused heavily on entering into markets that have relatively high odds, indicating that a lot of goals are likely to be scored. But as I've alluded to throughout this video, it doesn't mean you cannot implement this strategy on markets that start with a lower under 2.5 goal starting price. Because at the end of the day, if there is a disconnect between the total number of goals which are expected to be scored by the 90th minute mark and the distribution of where the goals are likely to be scored, there will be an opportunity for you to enter into the market and get a profitable trade. You just get a higher value on the higher market games. But obviously them games aren't there every single week, so sometimes you do have to go into the lower odds markets to find opportunities. In terms of where there isn't an opportunity for the under 2.5 goal strategy, well, if the two teams that are playing both score very early and concede very early in games, clearly there's no opportunity there. And it tends to be no opportunities where the team tend to score evenly across the 90 minutes. As in this instance, the starting price for the under 2.5 goals will accurately reflect the actual percentage probability of the game finishing with under 2.5 goals, and the time decay will be proportional to the probability of a goal being scored, so there's no opportunity in those types of games. I have a bit of a bonus for you for making it this far into the video, and that is all about tracking your results. As this is a trading strategy, it isn't about winning every single time, it's all about winning more than you lose. I always recommend tracking results for this strategy, or for any strategy in particular, using an Excel spreadsheet. It doesn't have to be anything too fancy, just something that shows your winning trades, your losing trades, your strike rate, and then obviously your overall P&L. I'll leave my very simple results tracker available to download from my Patreon if that's something you're interested in, but I'd highly recommend attempting to create your own profit and loss tracker, as it will develop your Excel spreadsheet skills, which are very important. Once you're tracking your results on your spreadsheet, you'll be able to filter it and break down where you're more more likely to lose and the games that you're more likely to win in. If you see that you're not profitable in certain games, say games where it's a favourite against a weak opponent, or a game where it's two strong opponents facing, or a game that starts at a particular type of odds, you can identify these in your results and then filter them out. Just stop doing them. Don't worry too much about trying to improve it, just stop them for now and then focus on the opportunities where you tend to win more frequently. Hone your skills in those markets and you'll be a much better trader than trying to fix everything, because you're not going to be able to fix everything. And that is it. You have made it to the end of the video. Many thanks for watching. I've got absolutely no idea how long this video is going to be. It feels like I've been talking for an absolute eternity. As I mentioned at the top of this video has contained a lot of information, so I'd recommend watching it various times to pick up all of that information and to digest it all. I really hope that you found value in this video. It's taken absolutely ages to make and do all the research. I hope that you can implement many of the things I've said for your own trading. I'd like to especially thank my patrons. If you want any of the downloads that I referred to throughout this video, and you also want to see some of the live trades that I've done, you can get that exclusive content only on Patreon, and the link to that is in the description below. Thank you for watching, and I wish you all the best for implementing this strategy going forward.